and welcome to 5 Strategies for Startup Investing Success with 1,000 Angels. We are so thrilled to have Freshly CEO and founder Michael Wystrach with us today.
Thanks for having me. Good, great.
Very good. So we're so excited to learn a little bit more about you, your business, your experience as a founder. But before we get started, I'd love for you to just tell our audience today a little bit more about Freshly, what the company does, and why you were motivated to start it.
Yeah, so Freshly is healthy meals shipped directly to your house. So it's ready-made meals that are all natural, gluten-free, no additives, no preservatives.
I love that. I love gluten-free.
Shipped directly to your house. So if you think about it, probably the easiest way to give an example is it's Blue Apron without the cooking. So anywhere from 6, 9, 12, 21 meals, average cost about $11 a meal. That includes everything shipped directly to your house. 2 minutes, heat your food up, and you're eating an amazing gourmet meal.
That's fantastic. So basically, unlike a lot of the other cooking, sort of delivery services out there, this one I don't have to cook at all.
Yeah, this is the only delivery service that is ships to a large area that there's no cooking. So it's already made, it's all fresh, never frozen. So just delivered directly to your house, heat it up. Food's good for 7 days when it shows up at your house. So yeah, our big mission, our big goal is to make eating healthy easy. Mm-hmm. We feel that eating healthy is actually really complicated and hard. You almost have to have a PhD in nutrition.
Meal prep, all the time that goes into it.
And the fundamental idea was, I started the company because I just wanted the solution. I wanted to eat healthy. I'm not a big cook. I wasn't, big into learning about nutrition. I just kind of wanted it done for me. So I connected some pieces, and I think the exciting thing for Freshly's customers is, we have a team of 10 R&D chefs from, we have a team additional of 6 different people on the nutrition side working with those R&D chefs. I think the power is that we're doing all the research for you. We're doing everything for you. A little thing like an example is our shrimp. Phosphate is in most shrimp, and
you have to be worried about shrimp, right?
It's really hard to find shrimp without phosphate, and it took us 3 months to source that shrimp. And I think those are the little things that we do behind the scenes because phosphate is bad for you. You shouldn't be consuming it, and those are just kind of the things that we do behind the scenes. So all you're doing is eating an amazing shrimp dish that tastes amazing, that takes you no time at all. But we've spent 6 months building that dish, and I think that's an exciting thing for our customers. And amazing. It's only costing $11.
Well, sounds delicious. Sounds like a great deal. Sounds like you are positioned for startup success. So we'd love to, sort of learn a little bit more about, some of the challenges that you may have faced entering into what is becoming a rapidly more and more crowded market. So speaking of market, our first strategy for startup investing success is really understanding the target market. So can you tell us a little bit about what sort of analysis and thought you put into it? Obviously, you were inspired by your own need for easy, healthy dishes. Tell us a little bit about the research that you did before jumping into the fray.
Yeah, so the food market and in general, I think the food market is absolutely a huge market. So it's a $1.3 trillion market. So
everybody has to eat.
Everyone has to eat. It's the only product I know of where a consumer has to buy it 3 times a day. So really, when you're looking at our market, it's a very proven market. You know what you're going at. The difference is segmentation, and then how do you stand out and be unique in that. I think the exciting thing for us is that we're part of this big movement, which is being lumped in as food tech.
Okay.
And I think for investors, sometimes it's my advice or what we've had to do is you have to make sure that you're not looking at buzzwords and you're really defining different companies and their use case of that company. And I think, so for example, we get thrown in with Blue Apron, with Plated, with HelloFresh, but they're really not competitors with us. It's a very different experience. So if you're buying a Blue Apron box, you really enjoy the experience of cooking. You want to spend that hour, 2 hours of cooking. It's more about that shared experience. With us, if you want to cook, we're not a good product for you. So for us, we're really giving people convenience. So I think it's important when you're looking in a big, huge market is making sure that that segmentation. I think for us, we defined the fastest growing market. So we looked at prepared meals in the grocery store industry is the fastest growing portion of the industry.
That's so true.
It's grown 7% year over year, compounded annual growth. It is, if you've started going to Whole Foods 5 years ago, you've noticed you go in there now and 50% of the stores prepared meals.
Or if you look at, places like Dig In, right,
Yeah.
which always seems to have a line down the block, being able to kind of have access to that.
That's exactly it is, and I think you can. But when we did our market research, and I think when we looked at it, we said that people are getting busier. For the first April 2015 was the first time ever in U.S. history that people are spending more on going out than they're spending on grocery store shopping. So the requirements are is you have dual income families. People don't have the time to spend. The idea of cooking is really more of a hobby. It's really more of an entertainment for us today than it is a necessity. And I think so when you're positioning yourself in a big market and could be a crowded market, you want to make sure you're positioning yourself in the fastest growing portion of that market, and you're differentiating yourself within that market. And I think we've done a good job in food tech of differentiating ourselves into what we think is the fastest growing portion of food, period. But then I'd also say that food tech, as an example, we make up less than 1% of all the food market. So really we're in less competition with each other than we are with incumbents.
Okay.
I think that's the other thing, is really who do you view as your competition. So just because there's a bunch of food tech companies in TechCrunch doesn't necessarily mean that that's where we're all competing. I mean, we think for us, what we're competing with is we're competing with Kroger's, Safeway,
Right.
Whole Foods. Those are all multi-billion-dollar revenue companies, not valuation companies.
Right, and there are a lot of different alternatives. I mean, I think one of the areas where Freshly really can create a tremendous amount of value is that, like you mentioned with the shrimp and the phosphate, there are so many issues with food safety and wellness that people might not be aware of, right? So, if I'm going to the grocery store, I'm probably thinking, oh, I want to get wild-caught shrimp or salmon rather than farmed, for all these different reasons. And you realize that there's just so much decision-making that goes into purchasing food. Now, you might have noticed I live above Whole Foods, so, I feel like Whole Foods can take some of that responsibility in, making sure that a certain sort of minimum standard has been met for most of the foods that they sell. So I think that that's sort of a very interesting strategic advantage for you to be able to bring the research and, like you said, these sort of PhDs, or I don't know if they're PhDs, but your R&D, nutritionists and chefs, etc. So, regarding our startup success secret number 2, it's all kind of about understanding your competition and your competitive advantage. So, as you mentioned, you might not have as many direct competitors, but you certainly have a lot of alternatives, right? So you've got the grocery stores, you've got the box deliveries, you've got people just ordering takeout. What sort of analysis did you do on the competitors, and how nervous are you about having a lot of extremely well-capitalized competitors in your space?
I mean, so I think I think we've done a lot of research. I mean, we're not only, you constantly have to be studying different areas. Not only if you're, there's trends in food, there's all sorts of stuff happening. In any market, anything you're looking at is you've got to be an expert, and that certainly leads to competition, what your competitors are doing, where the prices are, all those things. And then I think for us is that, we're in a unique spot, we're in a unique space. There's a ton of operational complexity, and we're in a spot that we're pioneers. And I think when you're pioneers sometimes, not that you don't worry, but usually your competition, at least someone starting coming at you directly is not going to come from the top. It's not going to be a big billion-dollar company. They tend to have a hard time creating kind of new ideas and furnishing those. For us, it would probably tend to be someone coming up from what we'd say coming from under another startup. But so for us, the conscious decision has been to grow and accelerate really quick, make sure that we're hitting more markets, that first-to-market advantage. And I think when you're a brand new product, that's really your primary competitive advantage, is that first-to-market advantage. And then within that is delivering an amazing product. So if you deliver an absolutely amazing product that people love and people want to use, and you can do it at a great value for the consumer, that's kind of a recipe for success, and that's been the one we follow.
Yeah, that's amazing. Well, it does definitely seem like you put a lot of thoughtfulness into it, and so on that note, we want to get into our startup investing strategy number 3, which is really do your research on the founding team. So, obviously I've met you before. You seem like a very charismatic person who has a tremendous vision for the company. Can you tell us a little bit about your background and how you put your team together?
Yeah, I mean, and maybe number 3 for you, it's number 1 for us. I think, people is the most important thing. I think first of all,
these are not in order, by the way.
So for us, I can say that the most important thing for us has been people, and that startups are hard. They're really difficult. So there has to be a ton of passion for what you're doing. There has to be a bought-in, and it doesn't matter what that is, because there's going to be good days, bad days, and there's going to be lots of bad days. You're going to have to get through those, and that comes from passion. And then I think above that is hiring specific domain expertise. So within every single company, there's different needs. There's someone who's charismatic, who's outgoing, who can come on an interview like this and really feel comfortable there. But then there's the other side of that, the person who stays and is very organized and makes sure everything happens. So me and my co-founder are great yin and yang. We have the same similar passion and drive. We have the same similar work ethic, but we have just different ways going about it. And I think from that was our founding team, and I think from there what we've really strived to do is fill in gaps and weaknesses that we have. So whether that's domain experience around marketing or technology or the actual operations, and going out and hiring, we always say, play above your weight, hire above. So if you're thinking you can only get this kind of employee, go try to reach and really get the next level employee, and make sure that employee is going to be as
And it's a competitive market right now.
Very competitive. Yeah, and I think that's where. But it's always, look, whatever you're doing, whatever the company is, there's always someone who shares a similar passion to you. And I think the worst passion you can have is the passion for I want to get rich, right? That's like the employee.
That's what the investors listen.
Yeah, and I think and look, I would say for us at least, our investors are a crucial part of our team.
Right.
When we brought on investors, it was money is cheap, it's easy, right? You're going to get a lot of people who give you money. The hard part is after you've written the check, what are those investors going to do for us?
Right.
What are the connections? How much advice? When are they going to make sure, And I think we've been smart with our founding team, but we've also been really smart with our investors. And we've brought in investors who walk the walk, talk the talk. Everyone's going to say they're going to be there, and we feel really lucky that the investors we have delivered. They've delivered great checks, but their worth has been well beyond their check sizes.
Okay, that's great. Well, it's a good segue because our next startup investing strategy has to do with something that the investors really need to think about, which is understanding your cash flow. Your business seems very interesting because, there might be some cash flow challenges associated with growth. So can you tell us a little bit about, the work that you did to really understand what it was going to take to build this business and what it might cost upfront to grow it into a successful dominant player?
Oh, I got lucky that I come from a finance background with investment banking, so finance was a strength. But
So you actually did a financial model.
I did, yeah. We had a great, and I still to this day am very intricately involved in, even though we have a CFO. But I'd say the first thing is it starts with, I think Elon Musk kind of parent is go back to the physics of a problem, and that's unit economics, and you break down and you start with unit economics. And,
absolutely.
I think understanding unit economics today is really important. I think the difference in us versus some other food tech companies is we looked at day one unit economics, and we never based unit economics on scale. The most dangerous word or phrase in startups is margin on scale.
Right.
And it's the idea that, okay, at some magical stage you get margins, and I think margins is a discipline. It's a pricing discipline. It's a product discipline. It's a lot of disciplines, and if you don't fundamentally start with those disciplines, you don't one day wake up and just have them. There's no 100 million, 200 million. There's none of that. There's no number magically that gets you focused on that. So I think starting there, that leads into cash flow, and I think cash flow projections and analysis. And look, the best startup is going to be really bad at cash flow projections. The best. I've yet to see, and I've yet to be part of. The younger you are, you just don't have a lot of history, and you don't know, and your projections are just going to be off. So I think really doing a good job. My advice is is looking at multiple variations of cash flow analysis, so high, low brackets.
And that's one of the things too that I try to explain not only to founders but also to investors, is that the purpose of a financial model is not to project the future, but it's to see what would happen under different scenarios. If we grow fast, are we going to find ourselves in a huge cash deficit? If we don't grow as fast as we thought, how is that sort of affecting the cash needs of the business? So I think it's really great, that you're sort of, seeing, the real purpose of modeling out several different scenarios, as well as sort of understanding the base unit economics of your product.
And always, as a founder, it's like, or I guess, is know your cash. Like,
right.
At the end of the day, you're going to get a pulse of where your cash is, the cash flow in or out. I think that's really important because projections will be, it's not if, they are going to be
right.
wrong. But the earlier you realize that, the quicker you can course correct. I think that's what a lot of startups is, and I think it's from investors and stuff like that, is that no one has a crystal ball. No one, everyone, at least in our team, I can say, does the best they can with the information they have. And as we're getting older and we get more information, our projections are getting better and better. But there's a lot of course corrections and there's a lot of understanding. So for us, it means that we don't sit down with our board once a quarter. We sit down once a month and we review, financials where we're at. Where do we do according to our projections? And what do we think going forward? And that ability to correct every month is a big difference than correcting every 3 months. Because sometimes that, if you can get quicker, and I, from a CEO, I do weekly, unit economics, KPI reviews with the entire team. And again, that's course correction. So we always want to correct as quickly as possible.
That's great. Wonderful. And so our fifth strategy for startup investing in success is understanding your value proposition. So, you obviously have a very unique value proposition, but we're not just talking about the value proposition of your product, or that you hold to your customer. We're also talking about the value proposition for the investor. So as an investor, saying, okay, what is this company doing that's unique in creating value in the market? And number two, what value am I receiving for, my cash investment in the company? So, we'd love to talk about that a little bit. I personally think what you're doing is amazing. The idea that you can take fresh, healthy ingredients and create a meal for a person for $11 is a huge value creation to society because, even though maybe you don't need scale to make your unit economics work, at scale, you can provide economical meals for a large number of people that, they're probably not going to be able to create on their own with $11 of ingredients and time effort, right? But you can do that. So number one, sort of talking about that. And then number two, talking a little bit about, the commitment that you've made to your investors to provide value for their investment. So I'd love to hear a little bit more about, that partnership. Obviously you don't need to give any details of the terms of your round or anything like that, but just to explore a little bit more about, what your promise is to the investors who come into the company.
Yeah, so I think to answer in order is I think the value proposition for us as far as consumer goes has been a very clear message of making eating healthy easier, and that's really the value proposition we offer. I think the value proposition, what we've done with our investors, I think really when you look at the 4 points that you've kind of summarized, I think that is like a summary of the value. And I think you look and you say okay, how good is this team? How much experience? The more experience a team has, the more value that team has. The later they are, right? So the better their overall projections, cash flow analysis, all these things are because they've already proved product market fit, all these different things, increases the value of that company. The market size. So is the best this company's ever going to be able to do is do 20 million in sales, or are they doing $1 billion in sales? And I think.
And do you think that that's a possibility for Freshly?
Absolutely. I mean, we're a $1.3 trillion market. I mean, I think even if we make a small fraction, which I think we're going to make a huge fraction, it's going to be absolutely huge.
Now, is that just in the U.S. or what's the?
Yeah, that's 1.3 trillion just in the U.S. That's just restaurants and grocery stores. So it's a huge market. But I think the value proposition changes over time. So I think if you're an early seed stage investor, you're looking for. What I would do if I were seed stage is I would look at the team, because that's technically where you're going to, and then I'd look at market. I mean, all the things you're saying and say, but for what we've done with our investors, I think is we've continued to really focus on on building value on the company. So every single one of our rounds has been up.
That's great.
Every single round, and it's been up by at least 2x.
Yeah.
But what we didn't do is we didn't start with the idea that you don't get rich in your Series A, you don't get rich in your Series B. So you want to make sure that you're not overreaching too early.
Yeah. Well, you know, for sharing all of your secrets to startup success. This is a little bit of a tongue twister with us today. You know, I think you're a really fantastic example of a great founder and CEO, and hopefully our investors will have the opportunity to invest in more folks like yourself. You know, can you tell us a little bit about where we can buy Freshly products? I know that I don't think I can get them here in New York City, but anyone else who's watching,
so
the lucky ones who can actually order it.
We're in 28 states.
But not here.
We'll be here. We'll be on the East Coast by the end of this year.
Okay,
So then we'll cover, I think, 47 states. So we're in 28 states. Easiest way is just to go on, plug your zip code in, and see if you're in our. If not, we'll notify you the minute we get to you. We're growing extraordinarily quick. It's $11 a meal. You at least got to try it. It will change your life. It is an amazing product.
Yeah.
If we're not in your neighborhood, we'll be in your neighborhood soon.
Great. Well, thank you so much, and thank you for joining us for the 5 secrets to startup success. And we hope you'll join us for our next webinar. Please visit 1000angels.com to learn more. Bye.